Welcome back. Big deal of today. JSW goes ahead and acquires Akzo Nobel, a deal that was in the works for the last many months and the last few weeks. Now we have Abhijit Roy, MD CEO at Berger Paints, the second largest paint company in India, joining in at a time where a lot of the conglomerates are eyeing market share in the paint industry. Abhijit, two questions. First up, thank you so much for joining in. I understand that you came in from a dental appointment. So, at a time when the industry is looking to plug some of the cavities and maybe get into root canals, etc., you're perfect to tell us about how the industry is likely to, react to this news. I asked this specifically because with Birlas, not a lot of people knew how they would compete on the ground. Here, you have JSW Paints, which has been there in the past, and you have Akzo Nobel, which has also been there in the past. So you're fairly well versed with their ways of working. So in light of that, how do you view this deal, especially for the incumbents?
So, Mangalam, nothing changes much, because these two players, as you rightly said, have been there in India already. Both JSW and Akzo have been operating in this market. We are more or less aware of their strengths and weaknesses, and we know what they are doing in the marketplace. So it's just a change of hands, possibly a change, in the management style that it is operating in. So from that perspective, there might be some small changes, but overall in the industry, nothing changes much. What does happen is that, there is a consolidation which is happening now. So there are now, 5 players in the industry. The top 2, Asian and Berger, remains. The third, fourth, and fifth position is up for grabs, and that's where the competition will be intensifying a bit. Between Birla, JSW plus Akzo and Kansai.
That you're saying that the top 2 stays intact because Birlas themselves have explicitly said that they are eyeing the second position. So let's speak about the Birlas and how they have fared so far, because it's been almost 12 months since they've been in the market. But on JSW and Akzo itself, you say nothing changes right now because you are well versed with their management style. Together, do you think they'll be a little more aggressive? And if you could give us a sense on what their position is in the market when it comes to dealers' strength in terms of tinting machine strength, and how consolidated entity like that can impact players like you?
So as I said, nothing much changes. These guys have been there for quite a long time, I think. Probably, they will have to change their tactics a little bit. I expect a little bit more aggression from them. So as you can see from the figures, which you have put up there, so out of the 4,091 crores of Akzo Nobel, about 3,500 odd crores is being, merged with JSW now, because the rest will remain as powder coatings with Akzo. So that, when you add up to the JSW total, it's around that, 5,000 crore mark. Which is where, which is why I said that, in the third, fourth, and fifth position, there will be a little bit of a skirmish there in terms of Kansai and, Birla and JSW plus Akzo now. So that's where it is. We continue to focus on our, growth opportunities that we see for ourselves. Last year also, in spite of Birla, we did manage to grow our market share, including Birla. If you take that into account, we had a growth in market share. We would prefer to remain focused on our own initiatives. I see a lot of opportunities there, and we are not very worried about this change.
Okay. Mr. Roy, while the 2 players remain the same and there's a structural change in terms of the ownership, there will be synergies, and I'm sure that there will be some focus in terms of trying to gain that market share. So in that context, how do you expect the competition to probably increase, and hence margins to probably be impacted on the ground for companies such as yours? Because you have spoken about intense competition in the past couple of quarters. So do margins get crunched even further? Are you anticipating that?
No, I don't think so, because frankly speaking, these both the people have been there for long years. Akzo Nobel has been there for 70, 80 years, and the team and the products and the structure remains more or less similar. JSW has also been there for now 6, 7 years. So nothing much changes on the ground. It's just that, yes, that there is likely to be a little bit more aggression possibly on the ground. But we are used to competition. We have seen much better aggression, even coming in from Birla earlier. And we have weathered the storm. As I said, we managed to grow our market share in spite of that. So it's not something which is very worrying for us.
It is not worrying for you when it comes to the number 3, number 4, number 5 players as well. But, being in the number 2 position makes you susceptible from competition coming in not only from below you, but above you as well. Because on the one hand, you are looking to grow your market share. Despite competition, etc. coming in, the leader has lost market share, and brokerages believe that they can lose further 200 basis points as well. They are deep-pocketed, they are, there for a longer time, and they are equally aggressive, if not more. There are cases open in the court right now. Birlas have accused, Asian Paints for such tactics as well. So in light of that, how do you view competition for you and margins for the industry? Because not only are disruptors looking to get market share, but the incumbent, the leader, also is eyeing that incremental market share.
Yeah, so Mangalam, we have a dual role to play, here in the movie, the Game of Thrones, which is going on now. We have, a role of an incumbent and an insurgent combined together. So we need to protect, what we have already on the ground, which we have a large number of dealers, customers, painters, which we have to protect. At the same time, since we are the number 2 brand, and we are, well known across the country, across dealers, across consumers, across painters as well. So therefore, there is a massive opportunity for us to grow share. So that's something which we are focused on. We are quite confident that we will be able to deliver on that. We have delivered last year, as you have seen, in spite of all the intense competition which was there, and that was at the highest level. We managed to grow our market share, and not only that, we managed to remain profitable or improve slightly in terms of profitability as well. So therefore, we are not, very, very worried, as to what is happening, because this change that you have seen now of JSW and Akzo is actually not a major change. It's a very minor change in terms of ownership, because both the companies and the people and the brands and the products have been in the market for quite some time.
You
Okay,
in the past have looked at Akzo Nobel yourself, right? What made you pass this opportunity? Was it just the price?
Yeah, primarily the valuation, which we found, not worthwhile, because that much of money or even a fraction of that, if we spend judiciously on building up, because we have a strong brand of our own, right? So to, have another brand come in and, try to build that up, it will be a confusion in the market. It is better that we strengthen our own brand, strengthen our own distribution network, strengthen our own, people strength, and that should give us, much better mileage than acquiring this particular brand.
all right. So, Mr. Roy, what we gather is that it's business as usual for Berger Paints.
That's right, and we need to carry on with our own, business objectives, which we have set out for ourselves, and we carry on. We have, this plan is already there. We have built it in that, this is going to happen, more or less it was well known.
So in that context, if it's business as usual, Mr. Roy, I have a two-part question.
Yeah.
Are you then in a position to raise prices in the market because you're not fearing competition snapping at your feet? And secondly, when you talk about market share, you've been consistently growing. You were at around 22% as of the end of FY25. Are you anticipating further growth in market share?
So for the first question, whenever it is required, yes, we will be increasing prices as and when required. As of now, the prices of raw material are benign, and I don't think there is a need for increase in prices. But, we have certain brands which are market leaders in their own rights. And in all such cases, there is a possibility of increase of prices as and when required by us. Not all brands can be, we can have price increases. There are some commodities where we have to be competitive. Vis-a-vis the leader, we have to maintain some sort of a price parity there. And so therefore, those are items where price increases anyway never happen and will not happen in the future as well. So it's a mixed basket, but there are a certain number of brands where price increases can easily happen as and when required by us. As far as the second question is concerned, the objective is to maintain and grow market share as much as possible. We have our own initiatives which we have. For example, in the urban markets, we are doing something interesting, and we expect that our presence in some of the critically urban markets like Bangalore, Mumbai, Pune, etc., will improve going forward. So this is what we are focused on. Our distribution network expansion is on stream. We are expected to add 10,000 tinting machines across the country. Last year, we had installed about 8,000. So that's a massive jump in numbers. And we expect that we will be able to attain our distribution objective as well. So combination of these two factors, some product categories like construction, chemical, waterproofing, where we are doing quite well, we expect our growth momentum will continue. Therefore, we are not very worried about this.
Right. I have a two-part question, Mr. Roy. The first part is demand, because the last 12 months, demand was very subdued. And in that, competition was intense. So that impacted margins for everyone in the industry. So has demand seen an improvement? That's part one of the question. And in light of the current environment, part two of the question is, I'm sure at some point both, the Jindals and Akzo Nobel will come together to address the press, address analysts on what their growth path is. What would you like to hear from them, and what would you, take note of very specifically when they're speaking about their expansion plans? What is it that may worry you, if at all?
So the first question, competition has always been there, Mangalam, and I don't see that changing much. We will continue to focus, as I have said repeatedly, that, our objectives are very clear, and I don't see any change in that, in our objective and, the way we look at the market. As far as the second question is concerned, what is worrying or not worrying, only time will say, right? But as far as we are concerned, we see that these two companies have existed in the market. They will come. They will obviously say that, we can become more aggressive because, the international had some constraints, and therefore we were not very aggressive on the pricing area, and maybe we will have some increased, pricing pressure, brought into the market. But we are used to this, and I don't think changes are going to make much of a difference. Ultimately, distribution, brand, these two are the ones which will play a critical role as far as the decorative business is concerned. And that's where we are focused on, and that's where, we think that we have our own strengths, and we can continue to operate in this market easily.
How's Birla's performance been in the marketplace right now? I mean, they've been claiming high single-digit market share at the end of the fourth quarter. Has that sustained? Have they been growing by leaps and bounds?
No. So it has been now static more or less for the last 3-4 months. It is true that, they had been, reaching that about 6.5 to 7% market share. That's where they were, at the exit place, in quarter four. And they have remained at those levels, for the last 2 months as well. From market information that we have, nothing much has changed after that.
And demand is improving right now, is it? Overall for the industry?
It is at the same levels, yes. So they are doing about 300 crores per month on an average. That's where last 5 months have been in that range of 280 to 310. That's where they have been operating. Nothing much has changed beyond that. So no,
I'm talking about the overall industry demand.
After that,
I'm talking about the overall industry demand. Is it a lot better than what we saw earlier?
Overall industry demand, has improved a little bit, not significantly improved. Progressively, it is improving. From April to May, there was marginal improvement, though May last few days it got impacted because of excessive rains. June has been slightly better than April and May. So overall, we are going to have a single-digit growth, as we had, in quarter four, slightly better, possibly, or around that point, in quarter one as well. And going forward, we expect that second half will be better in terms of growth rate.
Okay, and you added 550 stores in the previous fiscal. What is the capex lined out for this year?
So, our main capex will be the completion of the expansion at Hindupur and starting up of the Panagar plant, so not significantly high, it's around similar levels as was there last year. And it's all from internal generation, no debts, nothing, so it's clean, absolutely.
All right, Mr. Roy, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Berger Paints, a very confident Berger Paints, saying that there is just a shift or a change in hands in terms of ownership at this point in time, but it is business as usual for them. And you can see that sort of reflect on the stock prices today as well. There's no real big fear which is seeped in terms of the stock performance. Asian Paints, as you can see, up around 1.8%, and Berger up around 1%. So it is Akzo which has benefited the most with this close to 9,000 crore deal. We'll take a short break, but up next, more stocks. Stay tuned.